Good afternoon. My name is John Nemerofsky. I'm the Chief Operating Officer of Sage Integration. I'm here today with Jeff Cole from the Security Industry Association. This afternoon, we're going to talk to you about key performance indicators around the financial part of your integration business. So here's the top 10 key performance indicators that I like to measure. My first one is a simple one. It's gross profit margin. How much revenue do you have left after your COGS, your cost of goods sold? The second key performance indicator I want to talk about in financial metrics is operating profit margin. How is your EBIT developing over time? So earnings before interest and taxes. And a lot of our industry talks about EBITDA, earnings before interest, taxes, depreciation, and annuities, but how you're measuring that over time. And as you go to buy your company or sell your company or buy other companies, every acquisition is going to ask about your trailing 12 months. So operating profit margin, how your EBIT or your EBITDA is developing over time. Next, I like to measure operating expense ratio and how do you optimize that. So I like to tell companies being between 60 and 80% is good. Between 70% and lower is where you want to be. So the lower the operating ratio, the better it is. Next, I want to talk, number 4 is about net profit margin. And that's how well is your company run, right? So what are you doing with your expenses, whether it's travel expenses, entertainment expenses, is how you increase your net profit margin by buying better, by managing your technicians in the field more efficiently. So you start to see as our KPIs in this series, whether it's hiring, operations KPIs, or sales KPIs, start to tie back to this. Working capital. As we're talking about KPIs and financial, working capital is critical. How stable is your company financially? And as clients start to look at if they want to do business with you, they're going to be running Dun & Bradstreet or DNB reports on you. So how healthy is your company? Current ratio, number 6, is what I like to look at. Can you pay your short-term obligations? And how comfortably you're running your business? Then I like to run the quick ratio test, acid test on the business. Is your how healthy liquidity-wise is your company? And then number 8 is the Berry ratio. Are you losing money or generating profit? I usually like to see this. And as I explained the Berry ratio, if you had $1 million of revenue and 800,000 of expense, you'd have a 1.25% Berry ratio, and that would be good. That would mean you've got $200,000 to reinvest in your business, or to take as a dividend, or to take as a distribution. Number 9, cash conversion cycle. How fast can you convert your resources into cash? And then number 10, of course, is AP AR turnover, and I'd like to see that in the 30 to 45 day time frame. 2-to-1 ratios, 3-to-1 ratio, even better. So that's the amount that you're owed as compared to what you owe. AR AP ratio and turnover. Thank you for joining Jeff and I today on this segment on financial KPIs. My name is John Nemerofsky. I'm the Chief Operating Officer of Sage Integration.